Hi guys, I hope you are doing well. I'm here again to update you guys about the important things that I've recently observed in the market. Also, I'm here to update you all about the global macros. So let's start. So this is my Telegram channel where I just come in and share my thoughts about the market. So recently, I've posted that US companies added almost 500,000 jobs in June, the most in over a year, and underscoring the ongoing strength of labor market. Private payrolls increased by 497,000 last month, marking the biggest advance since February 2022, according to the published Thursday by the ADP Research Institute in collaboration with Stanford Digital Economy Lab. So now so if you want to read it further and get my daily updates, you can go follow my Telegram channel. The link is in description, and also you can subscribe to the channel as I will try to provide as much as valuable content to you guys. Now let's come back to the topic. So by the what does the news mean, which I just read out to you? That news simply means that the Federal Reserves, which have been increasing interest rates since last 1 year almost, uh, cannot so just to give my new like the viewers a basic understanding of why Federal Reserves increase interest rate. So they increase interest rate because they want to bring down the inflation. So for inflation to come down, the in the economy, the actual jobs the unemployment rate should increase, which means that the jobs in US, so we are talking about the Federal Reserves in the US, which practically every economy in the world follows. So they actually want to bring down the inflation. So for the inflation to come down, they actually want the unemployment rate to increase. And but the twist here is, after like so many increases in the interest rate, I think the interest rate went from almost 1% during, or negative also in during COVID, to almost 5% now. So 5% is a significant interest rate, which means that now to borrow money you actually have to pay more, and this discourages businesses and other things in the economy, like other economic activity. That's why you all heard about that recession is going to come. um, yeah, so story in a nutshell is that almost a 5% increase in the interest rate has still not tightened the job market. Why the Fed wants the job market to get tightened is because when the job numbers come down, uh, this will lead to lower earning by so many people in the economy, as they will get unemployed. This will lead to less spending by them, which will eventually bring down the inflation. But this is currently not happening, even when the Fed has almost increased their interest rate by 5 basis points post 500 basis points, which is 5% since COVID. So now, like looking at the macros, we are at a very crucial juncture, because if this is the scenario, Fed will again come in and say that we are going to start raising the rates massively, because inflation is a core problem in the economy which they want to solve right now. They don't care about the markets right now. So this is a really bad news which came out in US in the last week, and we need to track the markets very cautiously going forward. Now, so let's discuss our market view. So this is a chart of S&P 500. Uh, this is a point. This candle on 26th June marked a swing low. So I think this is a level to watch. Until we are above this, I think we are doing quite comfortable here. So this will be SL for bulls. I usually try to analyze global markets as well, because it is usually benefit to look at all the markets around the globe. I also want to in the future start trading S&P 500. I track them very closely, the US markets, and I really want to start trading them. And also it's beneficial for the people trading in India to track the global markets. So uh, why this point is the why this point we are treating as a stop loss, because this was the last place where the buying came from. And if this swing low breaks, I think there will be a completion of a double top kind of structure, which can eventually uh, give us a targets of this. If you know basic technical analysis, you know how to take out the targets of um, a double top, not a double bottom. Sorry. So yeah. So I think until we are above this level, we are doing quite comfortable. However, the only thing which concerns me is the job market data which came out recently. Yeah, because it is a really significant issue. I really want to emphasize on that again. I will really keep a close watch on what the Fed will do going forward. But till then, we need to prepare a what if scenario for every situation. Um, yeah, so this is a cutoff level for shorts. SL for shorts. I will again tell you guys to refer these charts when trading in the Indian market. So what I mean by that is when these levels start to break, you don't be short on the Indian market, and when these level starts to break, you don't be long on the Indian market. So you need to play in the same direction for both the markets. If the S&P 500 is breaking out, you will also go long on Indian market. Uh, Given that you follow the price action which is happening in India, but you won't short the market. If S&P is bullish, our markets will be bullish because all the global markets work in a work work or go in a similar direction in the long run. However, there can be some sort of divergences in the short term, but I think you should wait for the confluence of cluster of evidences that you get by looking at both the markets. And if you trade if both the markets are in your favor, for example, if you are bull and both the markets are bullish, you will make a lot of money than you'll make when S&P 500 is falling and Nifty is going up. So it is always advisable to track these markets. So yeah, these are the cutoff levels I've given you guys. Now let's move to the Indian markets. So um, I'm just removing all the noise from the charts. Let me delete. So this is the very crucial level which I marked. I will show you the daily charts. So what happened on this was the day. This was 30th June 2023. This was Friday. This was a very crucial day for our Indian markets, as I had already drew this resistance, and I also updated this on my Telegram channel that we gapped up on Friday, and this gap up is really significant because we gapped up above a major resistance. This is a major resistance, as this is a almost 2-year-old trend line which was coming and it was acting as a resistance, and we gapped up above this level, and we opened a gap up above this, which marks this as a breakaway gap. I have marked this trend line. So until this gap fills, this is a breakaway gap. So breakaway gaps are usually very significant gaps which happen above a major resistance or below a major support. So this gaps generally lead to significant rallies or significant fall in the markets. But I want this gap to sustain if we will be bullish in the markets, and if the markets continue to stay above this level of 19,000, I think we are doing quite comfortable. But if the markets again start to like come below it, it will be very what do you say? It will be very if the markets do something like this will not be a good what do you say? A case. It will be complete. It will be a significant bull trap, I would say, because the market gapped up above its major resistance. It rallied for 500 points almost in Nifty, and again it coming below this gap, which is a breakaway gap, which we have assumed as a breakaway gap for now, uh, will make will like trap so many bulls here that the markets will plunge, as the bulls will run for a cover. They will cover their long positions, which will trigger sell orders, and the market then has to fall. And if we again come below it, I think we are again going to follow this wedge which we had formed, and our markets might eventually come here, but there will be a lot of hurdles in the between. I'm not saying that if we just come here below this channel, we are going to go to 17,600. I'm not saying that, but I'm saying that if we come below this breakaway gap, there is going to be there are going to be sell orders triggered, as the stop losses for bulls will be triggered, and the markets might plunge. I'm not saying it will plunge, it might plunge. And this level of 19,016 is the low of this candle is 19,024, as you can see on the screen. So if the markets come below it, I won't be long on the markets. But until and unless I am about trading above this 19,000 level, I think we are okay, and we must, in a normal scenario, I would have usually bought the dips. So I even said on my Telegram channel that so what did I say? So I said that today markets have given a dip. first time after 26 June, which marks the start of recent rally. Use the Fibonacci retracement levels to buy the dips. So by this, what I meant was you simply use the Fibonacci tool like this. This was the start of the recent rally, and you basically mark these levels. You basically mark the Fibonacci retracement levels. This is the 23% retracement. This is the 38. This is the 50. This is the 68, and so on. I don't want to go below it. I don't want to take this 0.68 as a level. I might still consider it because it is just close to the gap, but I don't want to consider it because if markets come to the 68% retracement level, it will breach my breakaway gap and it will be filled. So let's avoid this level. So what ideally I would have done is, for example, if I wanted to stay long on Nifty for, let's say we are currently trading in June, and my view for June, no, we are trading in July expiry, and if my view for August is also bullish, what would I have done was, um, so in this 23, so let's say I want to buy 100 lots in Nifty futures. So what would I have done is, I have like 3 levels here. So I would have bought 33 quantities of futures at this level, 33 of at this level 19,190, and rest 33 of my position at 19,087, and placed my stop loss below this gap up candle. So this would have been a ideal case for me. That's how I would have placed. Now that the news about the ADP has the job data in the US has come up, I will play a little more cautious. For example, if I wanted to go along with 100 quantity, now I will buy only let's say 40 quantities. So I will accordingly divide it into three, let's say 12.5, 12.5, and 12.5. I'm just giving an example here, and that's how I will, so not 12.5, so 13, 13, 13, let's say uh, 39 quantity. So I would do it like that, and I would again place a stop loss below this breakaway gap. And I would still be long on the markets until this gap is filled, because I think looking at the macros is important. It's really important, but price action is supreme. So markets are currently at all-time highs. We can't be like fully bearish on the market, but we can actually have our cutoff levels, and we can play them accordingly. So 19,500 stays the crucial hurdle for Nifty, as it has the highest call writing. Yeah, so that is how I would play Nifty. No long below 19,000. What was the level again? I just want you all to remember this level, 19,024. We won't be long below this level, but we won't be short above this level. I hope you all understand this and you stay on the right side of the market. Just one more, one of our again favorite charts, which is Bank Nifty, which we all love to trade. Yeah, just clearing the chart for you all. So this is a chart of Bank Nifty. So I also updated above this mother candle range that we recently broke out, and there was a significant rally in the market. I will show it to you on the Telegram. So this was the update I had issued, and after that so I said that I have the targets marked in case of a breakdown, which you guys can refer to. We can easily capture 700 points on either side. So on the breakout of this candle, we could have easily uh, caught 700 points on either side, but I went long on the breakout, on the upside breakout of this mother candles range on this day, on Tuesday's closing, uh, and closely trailed my SL below, like each so daily, what do you say, low of each days. So my low, so for example, when I went long, I just want to see you teach you all how to trail your losses. So I went long on Tuesday. On Wednesday, we opened gap up and we sustained the gap up. So there was no need for me to actually exit my position. I trailed my stop losses to low of the day of Wednesday. Then I trailed my SL to low of Friday. And then I trailed my SL to low of Monday. And my SL was triggered on last Friday. I went long on 27 June. My SL was triggered on 7th July. So I was in a trade for almost more than a week. And how much was I able to capture? I was able to capture the 700 points that I predicted, uh, because the range of this was 700 points. I I like so this was not a very simple exit for me. What I did was I exited some of my positions at 45,500 levels, which marks a round number for me. I usually exit at 500 points in Bank Nifty, for example, 45,500. Then I would have exited some of my positions at 46,000. So, and I also left some of my positions open if the Bank Nifty continued to rally. I did not want to miss out on the rallies. So the little position that I was trailing after booking my profits, I was stopped out from the trade on Friday. I took the SL, and now I am looking at the markets unbiased, and I'm thinking, what rationally, or not rationally won't be the right word. So my mind is unbiased now as I'm out of the trade, and I'm thinking that now what to do with the market. So again, what so again, let me show you a trend line. Until so I had marked this trend line. This is also again a trend line which joins 14 December 2022 tops and 30th May 2023 tops. And I marked this trend line. So we broke out of this. So I would not be short until and unless we breach this trend line and again come below it. So this will be my first in Bank Nifty. I have two scenarios which will make me like bearish on the market. Like I have two cutoff levels for being short on Bank Nifty. So if the markets come below this trend line, I will get cautiously bearish. I won't be fully like strongly bearish on the markets. So I will become cautiously bearish with a stop loss above this trend line if the markets come below this trend line. However, if the markets, so this mother candle range, which I have also said that this is an accumulation range, accumulation zone, as the markets went sideways for like over 1, 2, 3, 4, 5, 6, 7, 8 days, and then it broke out. This means that the big money has accumulated its position here in the given range, and the markets then broke out. So this makes this an accumulation zone. So if the markets again starts to come below this accumulation zone, which is 43,366, this is a significant number. If the market again comes below this number, then I will be strongly bearish on the market. So this is my cutoff level for the Bank Nifty. If not, again, use the Fib retracement tools like I teased you on the charts of Nifty to accumulate your positions, and that's how we will play. One more chart, one of my again one more my favorite chart at the moment is crude oil. I will show you the chart of this is the this is yeah, US oil. So US oil went sideways for a lot of months, and recently it has broken out of these levels. And you can, so a trade idea is you can go long on this as it just broke out of its sideways range. It is also a fake breakdown of this like support, which it so what is a fake breakdown? The market breached these levels here. It went sideways. It could not go lower, and it again came above it. So the people who would have went short on the break of this trend line, their stop losses have been triggered, and now it will lead to a short covering rally. That is simple. So we can easily take a trade of this, like keeping our stop losses below the support and taking a small target till at least this 200 EMA. So a trade for commodity traders. Yeah. So this is not a financial advice. Just control your risk, I would advise, and you can make a lot of money even if you're taking trades which are 1:2, which gives a risk reward of 1:2. Just yeah, I think that was all. Please follow the Federal Reserves. So the interesting thing here will be is to see that what are they going to do about the uh, job market? How are they going to like keep it cool? It is really hot right now. Let's see what the Fed has in mind. So keep a track of that. And I have already given a cutoff levels for you guys to be long or short on the market. Do watch these levels, and please manage your risk accordingly. It's not about how much money you make in a single trade. It's not about it's not about being right or wrong. It's always about calculating your risk, staying in the game for the long run. You sometimes have to take that one run, two run, and then hit a six when the market goes according to you. So keep a watch on the market, mind your risk. That's all I can advise. And all the best, guys. I hope you all do really nice in your trading journey. Thank you.